the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements on the SGX. Well, Singapore shares rose even as tariff worries returned to the fore this week. So the Straits Times Index was up 0.25% at 4,023 points at about 2:17 p.m. Singapore time. And that is with a value turnover of some 654 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the green as well, up 0.45%. We're looking at 4,031 points. In terms of value turnover, that's 1.17 billion Sing dollars. Now gainers outnumbered losers, 252 versus 251. Top advances for today, we've got for you DBS, UOB and Simco Industries, and top decliners we have Asus, Hong Kong Land USD and HPL. Now, in terms of companies to watch, we have Del Monte Pacific, because the group said today that it is expecting a capital deficit on its balance sheet from write-offs in relation to its U.S. subsidiary Del Monte Foods. Now, elsewhere, from how U.S. President Donald Trump is set to send his first tariff letters to trading partners overnight, to oil prices slipping more than 1% today after OPEC Plaza surprised markets by hiking output more than expected in August. We've got more international headlines in focus. And joining me today is David Kuo, co-founder of The Smart Investor. Mr. Kuo, welcome back to the show.
Yes, thank you, Tian Tian. Good evening to you.
Good evening. And Mr. Kuo, let's start with Asia this time around. I mean, U.S. President Donald Trump, he said he would send his first tariff letters at, I think, 12 a.m. tomorrow, setting out what Washington will charge for countries wanting to do business with the U.S. Now, an extra 10%, according to him, will be added to any country aligning themselves with the so-called anti-American policies of BRICS. What do you make of this, and how are markets in the region faring as investors await more news on the trade front?
Okay, several questions there from you, Tian Tian. As far as markets are concerned, I would say it was kind of risk-off at the moment because, why bother trading today when you can wait until tomorrow and find out which of these countries are going to be receiving those letters? I mean, at the moment, he said between 10 and 15 countries will receive the letters, but you would have thought that if he was going to be sending those letters out in a few hours' time, he would have decided which other countries and how many exactly are going to be receiving the letters. So once again, it's just Donald Trump talk, and we just have to find out where the action is. But the other thing he said was, they will be charged tariffs for doing business with America. He still doesn't get it, does he? That it's actually America that has to pay the tariffs, not the countries. Yeah. The countries don't pay any tariffs at all. And so the exporter exports the goods to America, the importer has to pay the tariffs, and then those tariffs will be passed on to consumers somehow. So that is your second question. The third one is with regards to the BRICS countries. Mm-hmm. I don't understand, Tian Tian. What is anti-American policies? Has anyone actually defined what anti-American policies really is? So if some of those BRICS countries, like India, wants to do business with China, is that anti-American somehow? So I think he has to decide, first of all, what exactly is anti-American and how does he define that before he actually sort of says, I will slap a 10% tariff on anti-American policies. It's just so muddled, Tian Tian, that it really makes me cry sometimes. Because I just think he doesn't know what he's talking about, and he just says it anyway, and then the markets react, and then we'll have to find out just exactly what is going to be happening by tomorrow, and then we'll find out whether or not those tariffs are going to be implemented on the 1st of August. I have my doubts.
Yeah, I think there are a lot of things to consider, and given the flip-flops, it's really hard to tell what would come until, when it comes, it comes. But going back to the Singapore stock market as usual, Mr. Kuo, how did the STI fare today? I mean, on Friday, we talked about property cooling measures and the impact on property developers. But as it seems, people are still going down to the showrooms over the weekend.
Well, why not? I mean, if you need to buy a property, then you need to go down to the showroom. The mere fact that these cooling measures are going to be introduced says that if you sell your property within 4 years, then you will have to pay additional duties on your property. But if somebody wants to buy a property to live in, then does it really matter that there's going to be additional duties on you selling the property? I guess it's only for speculators. But the other thing is, I mean, this is something that has plagued me, whether I was in Hong Kong, whether I was in the UK, whether I'm in Singapore. Property prices are a function of supply and demand. If you think that property prices are too high, then build more. If you build more, then property prices will come down. If you don't build enough and demand is there, then property prices will go up. And it's something that even the UK government doesn't fully understand. They talk about high property prices. Well, if you think that property prices are too high, then just build more. Allow property developers to build more properties, and property prices will either stabilize or come down. I mean, look at what happened in China. They allowed them to build more. What happened in China? Property prices slumped. So you can't have it both ways. You can either say that people are going to be storing wealth in their properties over time, and as a result of that, they feel wealthier, which means that property prices are going to rise. But if you think that property prices are too high, then just build more, Tian Tian. It's so simple.
Okay, now, Mr. Kuo, let's zoom in on some of the companies to watch for today. We've got Monte Pacific, I think shares up about 28% at the close because the group said that it is expecting a capital deficit on its balance sheet from write-offs in relation to its U.S. subsidiary Monte Foods. How would you read into the news and investors' reactions today, given that the developments are set to not disrupt Monte Pacific's operations beyond the U.S.?
Well, I think Monte Foods in America is a subsidiary of Monte Pacific over here in Singapore, which is also listed on the Philippine Stock Exchange. And I think Monte Foods, the American business, is an elephant on Monte Pacific's back. And the fact that they're going to be jettisoning Monte Foods in America is probably a good thing. I think it is a positive move for Monte Pacific. As far as Monte Foods is concerned, what the straw that broke the camel's back in the case of Monte Foods in America really was the import tariffs on steel and aluminium, because Monte Foods cans stuff. They put things into cans. And the mere fact that steel is going to be more expensive really was the straw that broke the camel's back. And I think in the case of Monte Foods, I mean, they did well during the pandemic because suddenly everybody rushed out and bought tin foods because, I mean, that was something that you could put into your cupboard and you could bring it out and eat it slowly. So as a result of that, they started producing a lot of goods. Then the pandemic ended and they were left with a lot of inventory. And they had to sell that inventory at a loss. They had to cut the prices in order to shift that stuff, and that affected Monte Foods. So maybe, Tian Tian, I mean, this is the canary in the coal mine, that maybe in the case of Monte Foods, if it is the high import prices of steel going into America that is causing the demise of Monte Foods in America, they may not be the only one. And of course, you know, there are other things like changing tastes. People don't really want tin foods anymore. They want fresh foods. I'm sure you do, Tian Tian. Given the choice of either tin pineapples or fresh pineapples, which one would you choose?
Fresh pineapples from the fruit stalls. Okay. I suppose canned pineapples in some cases.
In some cases, but not all the time.
Okay. Now, Mr. Kuo, let's talk more about Singapore-listed stocks because our colleagues at the Business Times released this article and it is titled, "Here are the top 10 best-performing stocks in Singapore's STI for the first half of the year." Now, the question, though, is looking ahead to the second half, what are the counters to watch then?
Right. You're asking me to look into my crystal ball, Tian Tian. Okay. I have a problem with this one, Tian Tian, because I don't know which direction interest rates are going to go. Okay. Theoretically, interest rates should remain higher for longer. And as we all know, there is this rift going on between Jerome Powell, the Fed chair, and Donald Trump, the president. And Donald Trump wants lower interest rates, but I can't see there's going to be lower interest rates if we go back to the story right at the very top, Tian Tian, about those import tariffs. Now, if I'm going to wear my sensible hat, I would say that interest rates are going to be where they are today at the end of the year. In other words, there's going to be no cuts in interest rates, even though Donald Trump would like cuts in interest rates. But I don't think interest rates will go any higher. And so therefore, if I was to run a managed portfolio, Tian Tian, I would want to have banks and REITs in there, because that way it's a bit like going into a casino and betting on black and red at the same time, right? Only if zero comes up do I lose. And so if interest rates were to stay high, then I think banks would do reasonably well. If interest rates were to come down, then I would think the REITs would do well, and so the banks may not do that well. But if I have a balanced portfolio of both REITs and also banks, then I'm going to be collecting dividends whatever happens. And so by the end of the year, I think I should be better off having both of those in my portfolio rather than betting all in on either banks or REITs. And the other thing I think might do well is the one that's already done reasonably well in the first 6 months, and that is ST Engineering, because I think there will probably be some kind of unease around the world, which benefits ST Engineering. So there you go.
I see. And further away, Mr. Kuo, let's talk about oil prices. They slipped more than 1% today because OPEC Plus surprised markets by hiking output more than expected in August, raising concerns about oversupply. Now, just to bring some numbers, Brent crude futures were down 1.2% at $67.50 a barrel at about 8:10 a.m. Singapore time. What do you make of the OPEC Plus's latest decision? What is the outlook for oil prices?
Well, in the back of the minds of OPEC Plus is Donald Trump's view that America should drill, baby, drill. In other words, he wants to expand the oil drilling capabilities of America. And as a result of that, I think OPEC and OPEC Plus are very concerned. And so what they're doing is they want to grab market share at the moment, drive down oil prices, and we know that it is probably cheaper for OPEC Plus, to produce oil than it is for America to produce oil. If they can keep oil prices relatively low, then it will certainly deter many of the oil drillers in America from increasing capacity or putting investments into drilling oil. Because who wants to drill oil if you're going to be losing money? So I think this is probably paramount as far as those existing oil-producing countries in OPEC and OPEC Plus are concerned. Drive down the price of oil, and that will deter the American oil drillers from going into shale oil, because it will cost them more to do, and they won't be able to sell it. So is this anti-American? Probably a little. So I think they better watch out, because the president is very against people who are anti-American. He would like to see much higher oil prices than they are now.
Okay, and finally, before we let you go, Mr. Kuo, let's talk about this one. When we talk about U.S. President Donald Trump, one can't help but think about Elon Musk, right? And it seems like Elon Musk now he is planning to form a new political party, and Donald Trump has called his plans to form a new political party ridiculous, and that the U.S. functions best under a two-party system. But the question for you is, I think Tesla shares were down some 7% in pre-market trade today. Investors were just slightly relieved on the launch of its robotaxi, and now he seems distracted by, the new political party. What would this mean for investors of Tesla then? Would you say that Musk is really distracted from being a businessman?
Well, I think, there is a method to Elon Musk's madness. He wants to, ideally, he wants his electric vehicles to be sold in America, but he can't do so because they are not providing the subsidies in America for EVs. And so he thinks that if he can actually break the Republican Party somehow, then he will be able to start selling his EVs in America, which is probably his home market and probably his biggest market as well, apart from China. So I think Elon Musk wants that. As far as Donald Trump saying that Elon Musk's idea of starting the America Party is ridiculous, I think I think Donald Trump misses the point here. Elon Musk doesn't actually have to win all the seats in America. If we have a look at the votes that went through with regard to the budget, they only won by one vote, the casting vote, from the speaker. And so as far as Elon Musk is concerned, he doesn't have to win all the seats. He only has to win one or two seats, sufficient enough to actually break the stranglehold of the Republican Party. And if he had formed the American Party prior to this, and he had the votes in Congress, he could have actually sort of destroyed the big, beautiful bill that Donald Trump was going to pass through the two houses. So I don't think it is as ridiculous as Donald Trump thinks. And Donald Trump better be careful, because Elon Musk has a lot of money, and if it wasn't for money, Donald Trump wouldn't be president. Let's remember that.
Okay, so it's not just about his focus on the business. There's a lot at stake as well, and I suppose more details to come as the developments unfold. Thanks so much for the insights, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.